Hey everyone, my next guest is John Truman Wolfe, who's the author of the #1 Amazon bestseller, The Coming Financial Crisis: A Look Behind the Wizard's Curtain. John's a really interesting guy with a great background, and we talk about the upcoming global financial crisis. It's always interesting to get a perspective from someone who's studied economics and a background in finance on everything that's happening in the economy right now and some future predictions. Enjoy. Hi, John. So happy to have you on the show, and thrilled for you to be here. How are you doing today?
Well, it's my pleasure to join you. I'm doing well, thanks.
Excellent. So why don't you tell us a bit about your latest release, The Coming Financial Crisis: A Look Behind the Wizard's Curtain. Tell us a little bit about that, if you would.
Well, that book exposed, among other things, who was really behind the financial crisis of 2008. Is a bank that most people have never heard of called the Bank for International Settlements. That bank is in Basel, Switzerland. It is the central bankers' central bank. It is, the term that I've applied to it is the godfather of the global financial mafia. The major central banks of the planet, 55 of them are members there. So members include the Fed, the Bank of Canada, the Bank of Italy, the Bank of Japan, etc. And that bank, I repeat, based in Basel, dictates to the central banks of the world. And central banks, as I'm sure you know and your listeners know, basically determine the economic health of a country. So the book exposes the BIS at some length. This is interestingly a bank that has its own, Swiss law doesn't affect it, Andrew. Its employees are immune from prosecution. They have their own militia on the property. They are above the law, believe it or not. And that bank, when it issues directives, are basically complied with around the planet.
And I think you had mentioned it at some point that there was maybe it's a theory or not, there was a central bank of central banks, right? There was one bank that was kind of leading the charge in all this, and that's the bank you had just referenced?
Yes, that's exactly right.
Okay, great. Maybe talk a little bit about the bail-in procedures and how this all ties in for those who don't know exactly what that is.
Well, it's a good question, and following on the introduction of the BIS, the Bank for International Settlements, the planet is awash with derivatives. Not to get too technical, a derivative is simply a security that has within it something that generates value or income, like the infamous mortgage-backed securities of 2008 were basically packages of mortgages. So it's not the mortgages themselves. The mortgages generate income, but the package of mortgages is a derivative. There are 1.4 quadrillion dollars worth of derivatives on the planet. The vast majority of those are what are called interest rate swaps, which is a mouthful, which basically means these are bets on the direction of interest rates. That's it. You know, B of A goes, I think Greek bonds, the interest rate on Greek bonds is going up, and Deutsche Bank goes, no, they're going down, and they bet. And that bet becomes a security, and then people bet on those bets, and people bet on those bets, and there is this pyramid. So you have about, it varies a bit, but about 75, 80% of those derivatives are these interest rate swaps, which are just basically Vegas-style gamblings. And the New York money center banks have got about 227 trillion, that's with a T, dollars worth of derivatives. And the Bank for International Settlements, I repeat, is kind of the godfather of this scene. They saw that these banks are pregnant with derivatives. In my opinion, somebody's going to put a pin in this thing sooner or later. But they issued this policy called bail-ins, to get back to your question, which basically say if a bank is troubled, they're going under, they're not doing well, they have the right and authority to take depositors' money and convert it to bank stock without the depositor's permission. Just take it. So that is, pardon me, that is bail-in policy. It is official policy in the EU, in Canada, and the Dodd-Frank legislation of a few years ago made it policy here. There's actually an instruction online put together by the FDIC and the Bank of England on how bail-in policy would work here. So this is, onerous. Most people don't have a clue about bail-in policy, or that their deposits are at risk.
So a little further to that, you wrote a book called The 99 Strongest Banks in America and Why It Matters. So for people that have, there's obviously an FDIC insurance that's up to $250,000 for individuals. When people are looking to invest, whether it's in a large bank or a small bank, what really should consumers be looking for? Because you're right, I don't think many people know about this. What do you recommend for consumers?
It's a great question. Bail-in policy applies to banks with $50 billion in assets or more. So I recommend to people to, if they've got, significant amounts of money in the New York money center banks, B of A, Wells, Citibank, JP Morgan, Chase, to move the bulk of that money to a smaller regional independent bank. Doesn't have to be a little teeny bank, but ensure that your bank has got deposits, assets rather, of 50 billion or under 50 billion, in which case bail-in policy does not apply, at least the way the regulations are written now. So I encourage people to move into smaller regional banks, it takes their deposits out of the target range for bail-ins.
Got it. And I'm sure it's very, very complicated. I mean, how does FDIC insurance fail? And is that part of this up and coming, this crisis that's potentially happening in the future?
Really, really, really critical question. I have not been able to get the FDIC to say whether or not their insurance applies in a bail-in situation. I've talked to Federal Reserve Bank in the issue that is online, written by the FDIC and the Bank of England, talking about the procedure of a bail-in. There is no insurance mentioned whatsoever. So I'll be dead frank with you. I don't know if it will apply or not. One hopes so, but the federal government has been, the Fed in particular, has been closed mouth about that.
Let's talk about fiat currency a little bit. So when I was just doing a little research, and I think I had looked into this years ago, the lifespan of fiat currency typically is 27 years. Is that your understanding? Basically, when the currency is pulled from gold, like for in our case in the U.S., it's when Nixon took it off gold in 71, right? Is that your understanding about 27 years?
I haven't heard that figure before. So I don't know if 27 years is a number. You're talking about at what point the fiat currency begins to deteriorate?
Yeah, I think it was average lifespan of about 27 years.
That figure doesn't surprise me. I don't know I don't have any hard data on that, but look, we're going through a major financial restructuring. We're kind of at the beginning of it. If I go back in my mind, maybe a couple of years, or maybe 2-3 years, and now people talking about Bitcoin, I just kind of blew it off. So this is some kind of made up something. But I'll tell you, digital currencies are here to stay. They're not going away. Bitcoin is extremely strong. There are thousands of digital currencies, most of which are just junk. But there are digital currencies that represent real value and real production. Ripple is an example, which has a facility to enable banks to make transfers internationally outside of the Swiss system very well. Ethereum, the company that provides the software for blockchains, and I'm no expert in that, but blockchains are basically the software devices that enable people to transfer currency or other assets. Anyway, Ethereum has value. So some of these things have real value. Some of them are just based on emotion. But this is changing, Andrew. And in my opinion, it won't be that long. Certainly in your lifetime, there will be no more cash. Bank accounts will be zeros and ones. The International Monetary Fund is fond of the digital currencies. China has developed a national digital currency, which they're testing in one of their provinces. Moscow is developing one. There are two articles I recently read from people in the Fed. It wasn't from the chairman, but it was from a couple of Fed governors that talked about, we've got to look into digital currencies. So this is coming. This is going to be in the future, without a doubt in my mind.
So interesting thing, we've got a lot of real estate listeners and a lot of folks that's their core business. Some of the numbers now are pretty staggering. I just saw that there was about 2.5 million mortgages in the United States that are 90 days late or more, which is a pretty massive number. How do you think, we've got an inventory issue, very low inventory in residential. Rates are obviously at an all-time low. Some of the data that's coming out saying that malls are going to be closed down in the next 2 or 3 years, and obviously retail's getting hammered pretty hard right now. How does these historically low interest rates affect the world markets or affect the U.S. specifically? I mean, how long? I think that they've said that the rates are going to stay pretty low for another few years, but how do you think that affects either the U.S. or just the world markets?
Well, I'll confess right off, I've been surprised at how strongly the real estate market in this country has held up. Certainly I'm in the general Southern California area. It's strong here. I've talked to folks across the state. You would know this better than I, but in general, the real estate market seems strong during all this pandemic noise and so forth. And at least the reason that makes sense to me are these rates, as you mentioned. Back in another life, I was a banker in San Francisco, and I remember making mortgage loans of, a 6% loan was really, really good. So here I've got a mortgage broker, friend of mine, and he says he's making these loans at 2.5% all day long. He said he made a 15-year fixed at 1.99. So these numbers, as I repeat, as you know better than I mean, this is unheard of. So at what point does that steam run out? I'm not sure. I mean, Powell has said he's going to keep rates at zero until the end of 2021. So, at least there's that, period of time in which it's going to stay low. How does this affect the world markets? With all our warts, we're still the leading economy in the world. We're still the place where foreign investors like to put their money. Again, you're kind of the real estate expert, but from my opinion, I think those markets will stay strong for at least another year or so. How that affects foreign investors, as the U.S. goes, so does the investors in China and Japan and the EU go. We're still leading the charge. Beijing is trying to catch up. Some years ago, a friend of mine sent the book that you mentioned to some people in Beijing, a friend of mine in Taiwan. He sent me an email and he said, the Chinese government would like to talk to you about the solutions in the book. And I thought it was a joke. I said, have them fly me over business class and put me up in this particular hotel in Beijing, which I happen to know was a nice hotel. And he sent me an email back and went, they'll fly you however you want. They'll put you up wherever you want. So I flew to Beijing. The CCP, Chinese Communist Party, flew me there. I spent a week talking to some, reasonably well-positioned people. That's a long story. But among other things, Andrew, I had dinner with the president of China Gold, which is the largest gold mining consortium in the world. This guy's got 40,000 employees. And he was buying up gold mines around the planet like Pac-Man. And China continues to focus on gold. I write a financial newsletter, and the last issue was on the war between the US and China on the subject of gold. So there is a focus now. If you look at the precious metals markets, they're doing very, very well, as are the digital currency markets. Today there was some downdraft, but Bitcoin, Ripple, Ethereum, these things are booming, as is gold and silver. So that seems to be an area where people are putting money in addition to real estate. And I know, talking to, I guess, a mutual friend of ours, Jason Hartman, this is still a booming market. So I'm waiting for something to turn, but right now, across the boards, right? Real estate's doing well. The stock market's near its all-time high. Precious metals are doing well. Digital currencies are doing well. And we've got, 20 million people out of work, and the GDP is falling like a rock off a tall building. So something doesn't fit there.
Right. Yeah, and I think over the last, we're 5 months into COVID at this point, and the last numbers I saw, I think we're close to 55 million jobless claims, and some of those folks are back to work, and some industries, the entertainment industry, the concert business, sports, are just decimated and wiped out. What do you think? It's pretty interesting through the subprime crash. Companies like Uber were started, and Airbnb, and so there's obviously all kinds of problems that are happening right now that didn't exist 6 months ago. If you're married with a couple kids and everyone's at home now, homeschooling, you give your left arm for another office, right, or another bedroom in the home. And back to the 55 million jobless claims. Well, I mean, what do you think this looks like in the next 6 to 12, 2 years, just as far as the job market, and specifically in the U.S.? Do you have any thoughts on that?
Well, I can't think other than it's going to be rough as hell, if I can say that. My son lives up in San Francisco, and among other things, manages his wife's beauty salon, a very kind of prestigious beauty salon there in the San Francisco East Bay. They're closed down. I mean, he's got 2 kids. They tried to open up, and Governor Newsom shut them down again. And he is not atypical. I've got friends, they're just out of work. They have no job. So I don't like being pessimistic, but I don't think this ends well. I think this catches up with you. I think and not to get partisan about it, but I think the president's doing a good job of trying to restore things. And in general, the stats are up, Andrew. I mean, in general, we seem to be, climbing out of that V on the right side of that V. But I think with this many people out of work, and companies exactly like you say, Uber, Airbnb, they're decimated. They're just decimated. So I think it's going to be, everybody's talking about how nice 2021 is going to be. I have my doubts. I think it's going to be rough.
Yeah.
Even as people dig out of this, mess, they're out of work for 3, 4, 5 months. They got to catch up on their bills and their mortgages and their, as I'm sure a lot of the mortgage lenders are being somewhat accommodating by, letting folks defer mortgage payments for a few months, but that'll go on only so long.
Yeah, absolutely. So for some of the listeners, what are some key takeaways or So you've got, which we'll leave in the show notes. You've got a podcast that you do. You've got a financial newsletter. We're big on education in general. What are some takeaways for the listeners? Like, what do you recommend right now? I mean, there's so much bad information out there. And back to what you said, I really don't think a lot of this is going to end well. I mean, the courts haven't been open for months and months and months, and probably backlogged on processing mortgages, and all of just a massive amount of mortgage failures. And so, what do you recommend? What would you tell the listeners just as far as how to be prepared, and really just on the educational side?
Well, I don't want to sound like a used car salesman, but I just finished last night at like 3 a.m, the most recent newsletter, which gets into that exact subject, which is, okay, good, what do you invest in? And I kind of detail that in some length. If you've got some extra bread, I would put it in precious metals, and I would put it in digital currencies. I specify those in the newsletters. I won't get into it here, but if you're not an owner of some gold and silver, I would buy some. You don't have to go nuts with that, but it's climbing now. Whether or not it's the pandemic that is driving the prices of gold and silver up or not is another question. But if you've got a little extra money in your reserves, but buy some gold and silver. I'm a big fan of silver because it's much less expensive. I mean, if things really hit the fan, you have a hard time buying groceries with an ounce of gold, which is around $2,000, as opposed to an ounce of silver, which is $30 or so today. So I'm a fan of silver. There are all kinds of bullion dealers across the country that sell these things. And I would stick my toe, if you're not, stick my toe into the digital currency market, because this area has matured and is expanding. And with the major governments on the planet, I repeat, Beijing, Moscow, Washington, all now talking about national digital currencies, this is coming. And so I think it's smart of people, if they're not familiar with that world, to get familiar with it. It's not that complicated. And investment wise, stick their toe in that water.
That's great. Well, really appreciate having you on the show today. And why don't you just let listeners know maybe the podcast website, and then the financial newsletter, and we'll put everything in the show notes as well.
Sure. Well, the financial newsletter is kind of where I gush things, and which is most important. It's a bit of a mouthful: strategic financial intelligence. So it's strategicfinancialintelligence.com. And you can get the newsletter there. We discounted the price during the crisis from $249 a year to $99 a year. It's $2 a week. If I can't make you $100 with this newsletter, I'm doing something wrong. So Strategic Financial Intelligence, John Truman Wolfe podcast, you can check. Yeah. I mean, there are specific recommendations in the issue that's just about to be published. I would encourage folks, if they wanted to, take a look. I named some specific gold stocks and some precious and some digital currencies. So I would encourage people to, sign up and read and get educated.
Perfect. Well, thanks again, John. Great to have you on, and good luck with everything in the future.
Thanks. Same to you. Thanks for having me.